Good afternoon, everybody. Today I'm doing a webinar on home office expenses and the bits and pieces you need to be aware of when you run, when you work from home as an employee, but more importantly, and probably more my focus is going to be on where you run a business legitimately from home, like you're actually running it from home, or whether you also run a business somewhere else, but also run your business part-time at home as well. Home office expenses. So as an employee, if you work from home, you may be able to claim some expenses that relate to that. And these are known as general home office expenses, which includes home office expenses, phone and internet. Now for employees, home office expenses include work where you bring it home, where it's not your normal place of employment. What you do need to have as substantiation, which we'll cover in a little bit later, is a 4-week diary to determine the business usage. And that 4-week diary is what the ATO require. And it's meant to be representative of the entire year usage. And then your 4-week diary, you can then apply for the whole year. You then also get a 52 cents per hour for heating, cooling and lighting, which includes depreciation of your office furniture. And if you happen to have bought a desk or chair or lamp or whatever, then you need to keep your tax invoices so you can claim it. Now, the 4-week diary is used for your home office, also your phone and also your internet. Where home is a place of business, which is, as I said, what I wanted to focus on. That was more as for employees. This is more for business owners. So there's two types I want to focus on. One is where you actually rent your home, and the other is where you own your home. And under either scenario, working from home and what the ramifications are. So let's focus on part one, renting from home. What's important is, and the same goes where you own your home. One of the most important elements here is you have to work out the usage of your home, whether that be rented or owned. Now, what that means is the tax office normally expect this to be done on a floor area basis. Okay, so what that means is, let's say you've got 100 square meters of house that you live in, and let's say 30 square meters of that house is specifically set up to run your business from. So what I mean by that is it's not readily adaptable for private use. It can't be used privately. It's 100% set up to only be used for your business and business usage only, with no adaptable private use. And because that's what the tax office expect. And let's say that floor area amount is 30 and your total area is 100. That means 30% is potentially claimable for an expense for your business. Now, using that 30% example, let's break it down. I'll cover own home in a minute. Let's start with renting. So where you rent your own home, the types of expenses you can claim are obviously rent, insurance for your contents, water usage, heating, lighting, cleaning and cooling. Now, what that really means is if your floor area worked out at 30%, that means your business can claim 30% of the rent, 30% of the contents, heating, lighting, cleaning, cooling, etc. Now, one thing on insurance, if you're running your business from home, you might have a separate insurance policy to cover the business equipment. You may not. If you don't, then you can apply the 30% in my example area. Now, the important bit to note is down the bottom here, there are no CGT consequences in doing this because it's not your home, you're renting it. And so claiming your 30%, so the business gets to claim 30% of all of these things as tax deductions. There's no other ramifications. Let's go to part two. So part two, where you own your home, the types of expenses you're going to have. Building insurance, contents insurance, water usage, council and water rates, loan interest, bank fees, borrowing expenses, body corporate fees. You may also have cleaning, lighting, heating and cooling, right? Which we haven't mentioned here. Now, here's the catch. if you own your home and you're wanting to claim a percentage, a 30% in my example, of building insurance, contents insurance, water rates, loan interest, borrowing expenses, and body corporate fees, what happens is, yes, you can claim it, but do it knowing that 30% of your property when you sell it will be now an assessable capital gain, because you've treated and claimed 30% of, because all these expenses here, all here, not these ones, they're separate. These are like usage expenses and these are like occupancy expenses, right? So if you're paying heating, lighting, cleaning, cooling over here, that's fine. You can still claim your 30% if you own your home in this space. But as soon as you start going down occupancy expenses like buildings, water rates, council rates, loan interest, bank fees, borrowing expenses, and body corporate fees, they're occupancy expenses. So rather than a running cost. So what that means is if you claim your 30%, that means when you sell your property down the track, 30% of that will now be assessable capital gain. And I would strongly argue that there's a high likelihood of not claiming that versus what you save on that. You'll be in front by not claiming this, because that, if it goes up in value substantially, that's going to have a fairly big sting in the tail. So you just need to be aware of that and really consult us closely about what you're doing and how you do it to make sure we maximize, you understand the ramifications and make out an appropriate decision for you. Now, examples of home office assets, just to go through some for you: computer, fax printer, copier, carpet, desks, chairs, bookshelves, calculators, bar fridge, microwave, lights, crockery, kettle, TV. And if it's in the business area only and can't be moved, like for meetings, that'll be okay, but a 4-week diary will be needed. And same with a DVD player. Running expenses. Remember I mentioned occupancy expenses before and that they're fine. The running, not fine. They're the ones that have CGT ramifications. Running expenses. If you're working from home and have a dedicated work area as an employee, you're entitled to claim equipment, etc. Now, up to the cost of $300, you can write them off if they're things that are only used for you working from home and are not private, or if they're over $300, you have to depreciate them. And then you're entitled to claim a percentage of heating, cooling, lighting, cleaning costs and running costs. Now, how to calculate the running expenses? There's two ways: fixed rate or actual expenses. Fixed rate. Instead of recalling all of your expenses for heating, cooling, lighting, etc., you can claim 52 cents per hour that you work from home. This is what the ATO works out as being approximately the average energy costs and the value of common furniture items used for your business. Now, to claim this method, you need to keep records of your actual hours spent working from home, or keep, which is what I'm going to say, or keep your representative 4-week diary to show the pattern, then apply that for the whole 12 months. Now, you need to work out separately for your home areas, your phone and internet, your computer consumables, and other bits and pieces. To calculate actual for lighting, cleaning, cooling, etc., you need a floor area calculation, like I said before, and then apply that to the actual costs. Now, if you're working from home as an employee, you'll probably find the fixed rate being the easiest methodology for substantiation, because all you need to do is keep a 4-week diary here, 4-week diary, and then work out how many hours that is for the 4 weeks, and then apportion that over the whole year. So you multiply it by 12 and then give you the total hours that you've spent working from home. Apply that by 52 cents and there's your claim for the year, and the substantiation is purely covered by the 4-week diary. Under this method, you might end up with a higher claim potentially, but the substantiation is a lot higher because you need a floor area calculation that needs to stack up to ATO scrutiny, and then you need actual receipts for the whole year for all of these things, and then you'll multiply it by your floor area percentage as a total of your home by your total costs on lighting, cleaning, heating, cooling, etc., for which you need your tax invoices as well. I would argue easier to substantiate and stack up ATO, much harder to substantiate and stack up the ATO methods. And I've covered before, I won't go through this now, about occupancy because I've gone through it already in the first slide. But the really important point I want to mention on this slide is the space in the home is a place of business not suitable for domestic use. Remember I said to you before, that's really, really, really important, because what the tax office expects is that if it's a legitimate business area, so e.g., take an example that, I'm a doctor or I'm a dentist and I start working from home. So it's highly likely, given the nature of your work, that there'll be a room or two where that's purely business because you've got your chair in there, you've got your equipment, you've got a reception area, you've got a toilet that's probably going to be just for your clients, and hopefully a side entry so that it doesn't impact on the rest of your house. Now, that's what they're really wanting. They're wanting to be able to justify that it's a legitimate business usage and not adaptable to private, that's what they're expecting. So you've got to be really careful that when you work these things out, that you really give some serious consideration to what floor area is realistic and what floor area is justifiable based on how the ATO look at it. Now, phone and internet. There are two ways you can calculate the phone and internet. This is more for employees than business owners. You can claim up to $50 without records, or you can calculate your actual expenses. Once again, you need to obviously keep a diary to work all that out and work out what your usage is for 4 weeks and then apply it for across the year. And look, there is an option too. You've got diary entries to record at this point here. If you've got diary entries to record small items of $10 or less per item, that you can have them total up to no more than $200 and claim them without receipts. Here's two examples of 4-week diaries. They're very different. Under one scenario, it's date, time, you started, time you finished, total time, business use, private use, and what you actually did. And this template here is far more complicated. I've got it there in case it suits someone, but I'm not going to go through it. This is what you need to do for your 4-week diaries. Are the sorts of things you need to have for phone and internet, stationery, and your home office usage. So I've gone through it fairly quickly, but the important thing to note here is, once again, what I want to quickly highlight to you is, with home office expenses, 4-week diaries are very common to substantiate common running expenses like home office, phone, and internet. So for employees, 4-week diaries are essential to be able to claim home office running expenses, phone, and internet. When you start getting into homes of a place of business, it complicates it and goes up to another level. But what's really important that you need to know out of this is that if you're renting your home, you can claim a percentage of all these things on a floor area basis, no dramas. But when you get into this space, understand that if you start claiming a percentage of these things, the CGT ramifications can be huge and probably will be cost prohibitive. But the other bit to notice that I really wanted to reiterate before I finish is this bit here again, that the space in the home is a place of business. It has to be not adaptable and suitable for domestic use. So when you're calculating your floor area percentage, make sure you really go through it with a fine-tooth comb and consider everything, because you want to make sure you factor in everything you need to factor in, including what the tax office expect to be able to justify what the true floor area percentage that would stack up to an audit. And once again, I would encourage you greatly if you're running your business and you're looking at potentially claiming a percentage of your home as a legitimate business expense, whether you're renting or you own, that you talk to us before you do anything, before you start claiming, so we can talk through the ramifications of if you're an employee home office, and not more importantly, but because the expenses are a lot higher, I'll focus a bit more attention on that. As a business owner, that you talk to us in great detail about what you're doing, what expenses you're claiming, how you set up at home, how the ATO would view it, how we can be clear what the floor area percentage realistically is that's not adaptable for private use and hence is able to be claimed for your expenses, which again is all about maximising your business claims on the home office front. And I encourage you to speak to us before you do any of those things so that you can claim every cent you're legally entitled to claim. So thank you very much for your attention today. I appreciate it. I hope that at the end of this webinar, you've got a much greater appreciation for things you can claim as a home office, as an employee, and especially as a business owner, so that you can maximise your claims in the home office space as a business owner. And I encourage you to ask us any questions and clarify that so we can adapt it to your personal situation. And until I speak to you all again, thank you for your time. Look after yourselves and goodbye.